welcome to IGTV's early morning call. I'm Angeline Ong, and this is the 27th of February. It's a pretty brisk morning here in London. Let's get you across what's happening on the markets. First, the headlines for you. Equity markets hesitant after worst week for US indices this year. UK earnings this week. We're watching out for Ocado and ITV. And the gold downtrend continues, closing down on $1,800. Now, more details on all of that in a moment. Let's take a look at the VIX now for you. Now, known as the fear gauge on Wall Street, the upward trend there since early February, still in play, possibly as investors gird their loins for potentially more aggressive rate hikes. Now, all this momentum, as you can see here, part of that was down to that PCE number as well. And of course, numbers that suggest that the US economy is still performing strongly, at least on the labor front. With 30 minutes to go until the European market open, this is how the pre-market is looking ahead of the open. I want to show you the FTSE here. The FTSE ended at around 7,887, I beg your pardon, 7,878 rather. Let's take a look at what it's doing on this 24-hour chart. It's at around 7,913, so we could have a slight bounce back there if we're looking at this 24-hour chart. The DAX, let's take a look at Germany now. The DAX there, a similar picture, as you can see. The DAX closed at around 15,209, and the early chart ahead of the open is looking at 15,273. And to France now, where we've got the CAC. Bring up the CAC for you. We are looking at potentially an open year 7,232. The CAC closed on Friday at 7,187. So it looks like we could overall see a slightly higher open for European stocks after Friday's performance, when European stocks had their biggest weekly fall of 2023. Let's have a look overnight in Asia now. Bring up the screen for you. The Nikkei is down slightly. The Hang Seng closed lower, around 0.2%, and the ASX in Australia down arrow as well, around 1% there. Looking across to Wall Street, because the pre-market there is also giving us a rather interesting picture. Here's the Dow Industrials. While we are waiting for more volume to come across ahead of the Wall Street Open, the early figures here show us that we could see further weakness. If the pre-market, at least the momentum this time of the morning in Europe is pointing at anyway. The Dow closed at 32,804. The Nasdaq, let's take a look at the Nasdaq here. Nasdaq, pulling up the chart for you. If you give me a moment. We are looking at just above the 12,000 mark there. The Nasdaq closed at around 11,393. Now, similar to European markets, the sharp selling that we saw on Friday due to fears of more rate hikes ahead meant that Wall Street also sustained the biggest weekly fall so far this year. So that's a snapshot of the market so far ahead of your Monday. Now, is confidence in the economy gradually improving in the Eurozone? Well, this is what economists anticipate. The Euro area economic sentiment indicator is expected to increase for a fourth straight month in February to 101 from 99.9 the previous month. Last month, most of the sub-indicators of the index rose. One showed continued signs of weakness. Construction. Now, over in the US, the market is waiting on durable goods orders for the month of January. Economists forecast a 4% fall on a month-on-month basis. The index seems to be becoming more volatile in recent months. Now, in December, it rose 5.6%. its biggest month-on-month since July 2020. Likewise, the 4% drop expected would be the largest monthly fall since April 2020. Durable goods orders will be released at 1:30, a bit later in the afternoon at 3 p.m, pending home sales also for January. A month-on-month gain of 1% is expected. In December, the index posted its first positive variation in 7 months. 2 straight months of gains has occurred since mid-2020. Now, moving on to corporate news, we've got numbers from ABF. Associated British Foods released a trading update for the first half of its fiscal year. The group says it expects adjusted operating profit to be broadly the same as the first 6 months of last year. Now, this is an improvement on the group's previous expectations of a lower operating profit. The situation is set to continue to improve during the second half of the year. This is as inflation is becoming less volatile and some commodity costs have started to decline. As for Primark, ABF expects first half sales to rise 19% to £4.2 billion. We're also watching out for Dechra Pharmaceuticals at the open. The group said this morning it now expects full-year underlying operating profit at the lower end of analyst forecasts, saying that trading patterns in the US at the start of this year have been largely unpredictable. Now, later this week, a few big names from the FTSE are due to report their full-year numbers as well. And here's a huge list of the key ones to look out for. Let's start with Ocado tomorrow. Apart from the last 3 months, let's take a look at the chart for you. Apart from the last 3 months where the stock has been trading sideways, 2022 has been another difficult year for Ocado. Share price has been divided by 7 in a period of 20 months from February 2021 to October 2022, reflecting the 4 profit warnings issued by the group last year alone. Also on the cards tomorrow, Aberdeen, Travis Perkins and St James's Place, followed on Wednesday by Persimmon, Reckitt Benckiser and Aston Martin, Lagonda as well. And on Thursday, the busiest day of the week in terms of earnings in the UK, we'll get reports from the LSE Group, Taylor Wimpey, Haleon, the newly spun-off consumer division of GlaxoSmithKline, or GSK now, and ITV. Now let's get a chart of ITV up for you, if I may, because this is a really, really interesting chart here. It's because after a massive drop of ITV share price this time last year, followed by an almost continued slide to support level end of September, ITV has been recovering, as you can see here, until now. Recently, ITV reported a boom in its viewership. This was, of course, lifted by the Football World Cup and also the launch of its new streaming platform, ITVX. And over in the US, we expect Zoom Video Communications to report its earnings for the fourth quarter tonight after the US closing bell. The market anticipates earnings of 81 cents per share. This would be the lowest EPS for the group since the second quarter of 2020. Revenue is forecast to reach around $1.1 billion, broadly unchanged on the previous quarter and up 2.6% on a yearly basis. Now, many of these stocks, much like Zoom, have really benefited after COVID and lockdown. But of course, it's all a changed environment now. We've had lockdown eased and China is in the reopening phase. We have people wanting to travel again and coming out a lot more. However, the hybrid working environment is still in play, and there's still plenty of people out there who would prefer not to travel as much as they used to. As we know, Zoom is one of these stocks, as I mentioned, that benefited from the pandemic and then very quickly fell from grace and is now getting closer and closer to its IPO price of nearly 4 years ago. Now, a couple of weeks ago, Zoom announced parting with around 1,300 of its employees, a vast number. It's around 15% of the group's workforce, joining the ever-growing flock of tech companies having to adjust their staff count after having massively acquired in the previous years. Also, this week in the United States, we'll get quarterly numbers from HP on Wednesday. Look out for Dollar Tree, Salesforce, and Snowflake. Followed on Thursday by Broadcom, Best Buy, and Costco Wholesale. So quite a consumer sentiment gauge there this week for us. Now, the Wall Street Journal has revealed overnight that Pfizer is in early talks to acquire another drug maker, Seagen. No price tag has been unveiled or talked about just yet, although the Wall Street Journal says Seagen is valued at around $30 billion US. It's not the first time Seagen has attracted a competitor. Last year, if you remember, it was close to being acquired by Merck in a deal worth around $40 billion. But the two groups failed to get the details all tied up and to reach a final agreement. Now let's move on to commodities, because it's been a very interesting space too, especially since we've just seen the first anniversary of the Ukraine crisis. Let's take a look at the oil chart for you. Now, many commodities like oil and other areas like natural gas did have quite a jump after, here's a chart for you, after Russia invaded Ukraine, or rather, as Moscow puts it, started its military operation. However, oil has come off its heady highs, and we're looking out at oil as well, because last Friday, the Baker Hughes survey showed a drop in total rig counts to 753 from 760 the previous week. This is entirely due to the number of oil rigs in operations, down 7 to 600. Also, staying with commodities, the commodities trend that I mentioned earlier on continues with gold as well. Now, gold has had this steep steep climb up to this 1,950 level before coming off there. And we're looking at these trend lines here to see where it might head to next. At the moment, it's stuck in this range, this 1,800 range, and moving slightly lower. It's slipping to a 2-month low at the moment. Those rate hike fears coming out of the US not helping. Also, strong job numbers and also the recent PCE has been feeding those aggressive rate hike fears as well. All there currently at 1,809. So plenty to look at, plenty to digest, and haven't even quite got off to start a week yet. That's it for now, but before I let you go, let me just remind you that we have loads more this morning. We've got charting at 10:30, and they'll join me for the look ahead later at 4:30. Until then, whatever you're doing, I hope it's profitable.
For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.